Hey guys, just wanted to give you a market update. Basically, a whole lot of nothing's going on in the markets. A whole lot of nothing. I kind of figured that after we had a muted reaction to the PPI numbers. They came in a little hot, but then the year over year did not. It was just a mixed bag, and it didn't. The market didn't really react. Okay, you can see here. This is the mid of the session, the 50% of the session, and the price is right here in the ES. This is the mid of the session right here in the NASDAQ, and prices right here. So we're not really doing much. What did happen is the one trade that did happen, I didn't take it because it was too quick off the open. But I did say all these longs, okay, if we broke the most traded price yesterday, we're going to liquidate. And that's what happened right here. Okay, so that did happen. That's about it, what really happened. We're in this choppy, we're just not doing much at all. We're waiting for 2 p.m. FOMC minutes, the Fed minutes, and then obviously if that doesn't do much, everybody's waiting for CPI tomorrow at 8:30 a.m. Okay, everybody. So I haven't taken a trade. I don't see any opportunities. I've just been basically journaling and compiling some stats for my trades. Um, I maybe could take this opportunity to show you guys what I look at. Um, what I look at, so I can do that right now. I could do day trade futures, and I do a lot of options, like advanced options plays. But in my futures trades, sometimes with options, but mainly in my futures trades, I use the internals here. Now this is basically borrowed from Peter Bezinchek at ShadowTrader.net. He calls it his quad. Okay, so this is kind of what he looks at, but I was with him for 2 3 years and learned a lot about reading the market from him, and a lot of this stuff is proprietary from him. I paid for it. However, it helps me read the market. Okay, I'll just go over really quickly what I look at. Okay, these are the ticks. Okay, these are the ticks, and that's every uptick and downtick in the NYSE and the Nasdaq exchange. Okay, every uptick and downtick is very powerful. You can see the movement of the market. It's very quick, and you want to be in the right side of the ticks. Okay, you can't. And then below here is the cumulative tick. It actually smooths out who's winning and who's not. Okay, so currently right now we're at negative cumulative ticks. So it's trending down. Trending down. Okay. Ticks are more bearish than the bullish right now. But we're chopping around. Okay. I'm not going to try to tell you guys to just short the market. But that's something I look at. All right. Another thing I look at is these breath bubbles. And that's basically a ratio of it's the ratio of up selling going into the volume. That's what it is. I'm sorry. It's the volume going into down stocks versus up stocks. So if it's red, that means that the first value is selling volume. So right now it's 1.63 to 1 on the NYSE and 1.32 to 1 on the NASDAQ exchange. That just means that there's slightly more volume going into down stocks than up stocks. Okay, a number larger than 2 to 1, either if it's red or it's green, is stronger. It's a stronger read. So 2 to 1, 3 to 1. I've seen 12, 20 to 1. That just means that there's a ratio of, let's say if it was red and it was 20 to 1. The ratio is there's 20 times more volume in down stocks than there is up stocks. It's pretty cool to look at that. I use that a lot. So when this is at 1, like it is right now, that's parity. you're most likely going to get a balancing market. Okay. Next, I want to go over these sectors bubbles. So each sector has a certain weight in the S&P. Okay. Each sector has a certain weight. It's a weighted index. So I have these sectors in sequential order of weight. So technology is 26.4% of the S&P. Healthcare is 15.1. Consumer discretionary is 11.7. Financials is 11%. You get the point. I have them in sequential order. When they're red, it's negative. When they're green, it's positive. Darker green, it's more positive. It's over 50%. Now these are all generated from the open, not from yesterday's close. So I know from the open who's strong, who's weak. Not from yesterday's close, from the open. Okay? So this is very important. Now, just before this was red and this was red. Well, that's not red anymore, just changed, but it's barely up. It's only up 0.05%. So these are benign readings, 0.909. The only, let's see here. There's really, the only things that are really red are utilities, real estate, and materials. And they don't account for the S&P. So that's not going to bring the S&P down. It's these sectors are going to move the market. Okay, that's why everybody looks at Apple sometimes, because it's got a heavy weight in technology. Okay, so this is very important from the open, and a lot of times it tells me chop. This is still pointing to chop. Yes, we just quote a bid. These just turned green, but I don't think much is going to happen until 2 p.m. Okay, next I'll move over into this. This is like this is the ADD. Okay, up here is, on the right, I have the reading for the S&P 500 ADD. That means out of 500 stocks, it's advancers versus decliners. So right now, the closer you are to the number 0 means that I will just say it's 250 stocks are up above their close from yesterday, 250 stocks are below their close. So that just means chop. The closer you are to 0 means that there's too much push and pull. Okay? This reading here is the NYSE exchange. It's out of every stock listed on the New York Stock Exchange. Okay? Those numbers are important, but these numbers, this number is out of the 500 stocks. This is actually what will move the market up and down. This is at the exchange level. Okay? That's why I have both of them on there. Now below this is the weighted ADD. You can buy this from Shadow Trader. It's awesome. Okay? Anything above this 0 line is, buyers are in control. Anything below it, sellers are in control. Okay, there's two different lines here. These bars represent weighted. They actually take into account the heavily weighted sectors. Okay, the white line in this is the unweighted. It just makes all the sectors equal. Okay, so whenever the bars are above the white line like they are right now, that's technology. You can see, right? This is a good illustration. All the heavy weighted sectors are green off the open. Well, look at the little sectors that don't have much weight are red, right? So that's why the white is below the bars. Okay? So this is not a strong read to 200. It's not very strong. So yes, it's showing that it's stronger, but it's not a very strong read. Okay? I can zoom out and show you just how deep the readings can get. This is like minus 1,000 on the days that we were selling off. Okay, so you can see, yesterday and today we've been more above the 0 line. All right, and lastly, there's other things I look at too, but I'll just show you these internals. Is just the this is the ADD of the Nasdaq exchange and the NQ 100. Okay, so the Nasdaq exchange is here. Okay, that's every stock listed on the Nasdaq exchange. But then this number, can't get any more parity than this, is the NQ 100, and that's actually what moves the triple Qs And the Nasdaq, they only move what 100 stocks, not every stock listed on the Nasdaq exchange. So this is at -2. So you know what that means? Basically, uh, 50 stocks are advancing and 50 stocks are declining in the out of the 100 stocks that move the Nasdaq. So it's right in the middle. You can't get any more parity than that. Okay, you can't get any more parity. So that's chop, right? This is how I look at chop. So a little quick review. The breath bubbles are at 1-to-1 ratio. That usually means not a lot of movement's going to happen. Okay, these numbers are green, the heavily weighted, but they're that strong. They're not that strong of readings. Okay, chop. And then we have the S&P out of 500 stocks. It's basically telling you 250 are advancing, 250 are declining. That's parity. That means that nothing's going to happen really. And then lastly, look at that. NQ100 is now at 0. 50 stocks are advancing, 50 stocks are declining. We're chopping. We're waiting for 2 p.m. for the FOMC minutes, and then tomorrow CPI. Today was not a market mover. Um, we'll just go back really quickly to the market profile. Let's see where we're at. We are at in the middle of the range, right? We're a little higher. Now we're going towards the little bit maybe of value area high to the highs, but I expect us to get probably pulled back down here and balance out to 2 p.m. I hope this helped. Maybe this generated some new questions. Um, uh, I just wanted to show you some of the things I look at to make me kind of go, all right, there's nothing to do. I don't want to force any trades. So maybe that helped some people, maybe not. Maybe give some questions. Hopefully, give me a like, subscribe if you haven't, and I'll probably check in later. And good luck everybody today. Like, there's nothing to do right now. All right.